Hello, fans and students of financial markets. This is Dr. Duru with 122, giving you the latest follow through on September 1st, 2021. Let's start with the S&P 500. This is a broken record, same old story, more all-time highs. The month started off pretty well, but looks like sellers stepped in and faded it down back to near flat. But that's all in a day's work for the S&P 500. It's just grinding and melting its way higher. All right, let's check out the NASDAQ. What's the story there? Well, the NASDAQ managed to gain a decent amount, 0.3%, and it is also in a melt up mode, so nothing much else to see here or to say here, is just going up, 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 and up. Now, small caps, IWM, is teasing us a little bit. It looks like it just barely made a high above last week's intraday high, but it still has a ways to go to hit the top of the trading range and break out. So as I've mentioned before in other pieces, I'm not being fooled by the IWM anymore. It will have to give me a breakout before I chase it higher, but I'm definitely willing to buy it at the bottom of the trading range. All right, and then we have the volatility index. Let's speed this up a little bit here. It's stabilized. This is, of course, the big caution, because around these levels have provided consistent support ever since, I was going to say May, June, but really since April. It's just hard to see because the faders are so effective. I'll put the cursor around these points here where the VIX just gets hammered as soon as it tries to lurch forward a little bit. But that's the nature of the volatility index and the larger notion or the larger condition of complacency that's all over the market. Let's take a look at the breadth indicators. We have the percentage of stocks trading above their 50-day moving average is creeping up higher and higher. It's at 56.3% right now, and it is at wow, that's pretty good. It's a little bit over a 2-month high. So obviously this downtrend that was essentially defined by the 50-day moving average is essentially broken. I'm not a bull. I'm staying neutral. Let's see what happens when or if this, my favorite technical indicator, gets towards the overbought level, which is around 70%. All right, moving along. Percentage of stocks trading above the 200-day moving average is, of course, the warning signal for breadth. You can see here that it is stuck. It had a decent jump here last week, but it's been stuck since then. So we'll see what happens from this point on. All right, so let's keep it moving along and hit the stocks from the last blog post. So first we have Applied Materials. Applied Materials has stalled out. I was thinking this thing was good for hitting the top of this range here, but doesn't look like it's going to happen. I did not put a position in on there. Best Buy is pretty interesting. BBY, it has reversed even more since my last post, and until this big bounce, it's hard to see, but at the lows, Best Buy almost hit 114. It looked like it was going to completely close this post-earnings gap, but this is where the buyer stepped in right at the 50-day moving average. I still think Best Buy looks like it's going to churn for a while. So, maybe this is a buy at the bottom ranges around here, and it's a sell or a short around here, but we'll see. Caterpillar, the big disappointment of the week. I thought that this was a pretty good setup here with the converging 50-day moving average and the 200-day moving average. 50-day moving average is the red line. Blue line is the 200-day moving average. You can see instead of using this support as a springboard to go higher, instead it broke down for a 1.4% loss. So this trade didn't work, and I'm just going to keep an eye on it. If it breaks out above here again, I'm going to assume that it'll be a much stronger move higher. And as always, we shall see. Dollar Tree. This was the big collapse last week. Sellers are still pressing the issue on this one. So there is not a buy signal here. I am waiting for maybe perhaps a close above this point now at 92.5, which would clear at least a bunch of this selling pressure. But for now, this is a no touch. It looks like sellers want to keep taking Dollar Tree down even lower. Facebook, opposite story. Facebook is going higher and higher and higher. It gained 0.7%. Like I said in the last post, I was better positioned this time with a bunch of call options. Those all, of course, went out profitable, and I rolled into some new positions. I still have the short position, though, as a backstop for what could be some kind of pullback this month. But I keep hearing pundits and other folks like that talk about expecting a pullback in September. So, with so many people expecting one, you know what happens? Well, it doesn't happen. All right, let's look at the software index. That's IGV. IGV is, well, nothing much to say for this week. Monday, sorry, yes, Monday, the actually that's not Monday, sorry about that. There was one big update right here, and that was about a 1.5% gain, and then that started the week. Sorry, that was last Friday, and it's been churning since then. So, like I said, nothing much to see here just yet. It's just stalled out. Peloton, that was the big earnings disappointment last week. Sellers are still pressuring Peloton downwards, so it's been dropping, but you can see the selling momentum is slowing down. So if you are bearish on Peloton, your opportunity may have passed you by, and sellers may be getting washed out. I am now going to look for potentially entering with a buy for a bounce back up, either to resistance or just to close this post earnings gap down. So, this is obviously the psychologically important level right here at 100, where the selling momentum is slowed down. So definitely, if it can bounce from here and then close over this hurdle and hit 104, I know, pretty good. Buy signal with, of course, a stop below this intraday low. All right, let's keep it moving. Red Robin Gourmet Burgers. It, is churning since I last wrote. I like the position I'm in, which is a covered call option position. I expect just a lot of churn, and I'm probably going to watch that call option burn off worthless. But, we'll see. I'm definitely a buyer of more shares if the market is kind enough to give me a pullback into this area. All right, SoFi. SoFi, I talked about being a pretty big disappointment for quite some time, and this 14 level looks like it wants to hold pretty firmly. I mean, I don't see a lot of buying interest quite yet, but with this 14 level holding, maybe my dire prediction of a full reversal of this big 58% jump won't happen anytime soon. So I'm a little conflicted as to whether there is a spot to buy here. I don't even like buying SoFi on a break above the 50-day moving average. Maybe above this would finally clear a nice bullish signal. But even after that, you've got to watch out for this potential sort of double top action. So keep eyes on that. Splunk. All right, Splunk is one where I said I would reposition, and I got in my reposition. And this definitely looks like a continuation move for Splunk. It gained 2.4%, and it looks like it wants to go higher. The doldrum days that define this big downtrend are long behind it. Take this breakout above the 200-day moving average very seriously. This is a very bullish move here, especially with earnings supporting the price action, and the 50-day moving average is now bending upwards. So that's also supportive of a bullish move. Spotify, I really, really, really like because of the buyback program, as I wrote about. And sure enough, I mean, the buyers have been just piling into Spotify day after day after day. It closed just right at the 50-day moving average. And, I expect this just to keep continuing because that massive $1 billion that Spotify's put into the bank to buy back their shares is nothing to mess around with. So I like that a lot. And I got a call position. Well, I said it in the blog post. It was I got a 240, 260 call spread that doesn't expire until I believe October. But I'll have to check that again. Then finally, there's Zendesk. Zendesk, I went ahead and got a put option. It was profitable for a hot minute there, but now the stock looks like it just wants to churn around. We'll see what happens. This I got a monthly put option, expires in September. I think it's the 17th. So there's a little bit of time, but we'll see what happens. Now, I just want to add a few bonus items because there are a bunch of interesting charts that have come up this week. One of them is Iridium. I actually have a position in this one, and I thought I was doing really well watching this thing pop 15% on Monday. And I thought, oh, I'm just going to kick back and watch this thing keep zooming right up back and challenge the old highs. Woke up the next morning and bam, this thing gapped down and went as far down as the 20-day moving average before rebounding a little bit. And then today it's up 3.2%. So now it's almost back to that previous point. I'm resisting the urge to sell and take profits. And, because now the trading action has looked bullish all over again. And I'm really wondering what's going on. So just trying to sit on my hands. We'll see what happens. Workday, that one I should have written about in my last blog post because it had a very good post earnings day, a big 9% pop. I'm a big Workday fan. I didn't happen to have a position this time around ahead of earnings. The stock is obviously extended. The buying momentum here is slowing down as you would expect, given the stock is stretched, closing above its upper Bollinger Band over and over and over again. Buyers will get exhausted at some point, and I expect to see some sort of cooling back in this area. Hopefully it cools just enough to set up the next buying entry point. Then we have CRM. This one's set up pretty nicely for what's called a calm after the storm. So CRM popped 2.7%, but it was even higher at one point post earnings. It cooled down a bit. The selling decelerated, and finally buyers stepped in here. That was the setup to buy. Typically, traders will wait till the next day to buy on the open, but I just went ahead and bought right away because I'm liking the whole setup for CRM for the longer term, and lots of big cap tech stocks are doing really well all of a sudden. So this seemed to be a good move. Lending Club Corporation. This is a breakout buy. I bought some shares today after seeing this breakout. It's not an all-time high. It's just I think it's a 52-week high that happened here. But this is a breakout buy. The stop is below the candle that created the breakout, which was a 9% move. And I'm hoping to ride that one pretty well. Then I'll just close out with one last one, which is Lucid. Readers know that I'm a big fan of the car. Hopefully when I grow up one day, I can snatch one up when they are in full production. The insiders sold stock yet again. You can see this huge volume surge today. You see this big green bar. The stock gapped down. Some buyers stepped in. I went ahead and just added some more shares. I missed this point to add shares, so this is sort of what I consider a second chance. I'm just accumulating shares in this one, and I'm just sitting on this like I'm a Tesla stock owner. I really think Lucid is a sort of a Tesla killer. I mean, not to put Tesla out of business, but I just like their cars a lot, and I'm looking forward to years and years and years of good performance from this company and the stock. So that is it for the follow through. Hopefully these charts worked out for you. Labor Day weekend is coming up here in the US. I'm hoping to get a housing market review done over that time. And for those of you who have this time off or a 3-day weekend, enjoy the fruits of your labor, and I will talk to you again next time.